It's been a long time since I've made a financial video, so I thought I'd update you on my latest investment portfolio. Just to be clear, I'm not here to give investment advice, I'm simply sharing how I'm investing my money. I pretty much always invested in ETFs, exchange traded funds, which are just a type of investment fund traded on stock exchanges made up of a collection of shares or other assets from a whole bunch of different companies. They're a simple way to diversify your portfolio. Up until recently, I invested in these 4 ETFs, all managed by Vanguard. I guess I'm just happy with Vanguard and used to them. 15% VAE, which invests in Asian companies, excluding Japan. 35% VGS, which invests in the world's largest international companies outside of Australia. 20% VGAD, similar to VGS, except it's hedged to the Australian dollar, meaning it seeks to minimise the impact of currency fluctuations. And 30% VAS, Australia's most popular ETF, which invests in Australia's 300 largest public companies. However, this month I sold the lot and bought a single new ETF, also managed by Vanguard, VDAL, Vanguard Diversified All Growth Index ETF. The main reason I did this was for simplification. I'm not a very active investor, I just like to buy something and then forget about it. Plus, I'm just not good at actively picking winning stocks or timing the market, and I don't think many people are. Actually, I don't want to be like that, as I don't have the time to invest. So what does VDAL consist of? This is the official Vanguard website. The ETF has a management fee of 0.27% per annum, which I think is pretty reasonable for what you get. They say it's very high risk, with at least a 7-year time frame, meaning that the value of your investment may fluctuate widely due to the inclusion of growth assets like equities, shares, which are inherently volatile. They're essentially saying that it's not ideal for short-term goals or for those who might need access to their money within a few years. Just a note, not all my money is tied up in the share market. I own my own unit outright. It's quite an old unit, but it's a place to live, and thankfully we don't have a mortgage, nor intend to get one. About a third of my cash is in the bank earning interest, which is around 5% per annum at the moment with UBank. So about 2/3 of my free cash is tied up in stocks. VDAL was only created earlier this month, 4th of March 2025. It's domiciled in Australia and is considered to be an index-style ETF in that it's not actively managed. Fund managers are not trying to pick and choose the best stocks in an attempt to achieve higher returns. It's simply passively managed to reflect the index it tracks. This is their product disclosure statement, which shows you what's in the actual ETF. This is the information for VDAL. It comprises 40% Australian shares. Some commentators have said that's too high. Personally, I don't mind, and as I've said, I'm certainly not here to tell you what you should or shouldn't invest in. The underlying funds are VAS essentially, both the ETF and the managed fund version. Looking at their webpage, we can see what that comprises. The Commonwealth Bank makes up more than 10% of the fund, with BHP, CSL, Westpac and NAB also making up a significant proportion, noting there are a total of 321 holdings, which you could download from their website. Remembering they just select Australia's biggest companies based on market capitalisation. They're not trying to pick winning stocks or anything like that. Larger companies like Commonwealth Bank and BHP tend to dominate the index due to their higher market caps. 29.5% of VDAL is made up of international shares. Looking at the fund's website, it consists of big-name companies such as Apple, Nvidia, Microsoft, Amazon and Meta, formerly Facebook. In fact, it invests in 1,455 of the world's largest companies. 18% of the ETF is made up of hedged international shares, with a very similar set of holdings as the non-hedged version, except that it is hedged to Australian dollars so that the value of the fund is relatively unaffected by currency fluctuations. 7% is invested in international small companies such as Tapestry Inc. and Casey's General Stores, companies I've never heard of, but I'm glad to have as part of a broad portfolio of investments, with a total of almost 4,000 holdings. Last but not least, 5.5% of VDAL consists of emerging markets shares, especially large Chinese and Korean companies such as Taiwan Semiconductors, Alibaba and Samsung. The point is, you can invest in thousands of the world's largest companies by simply investing in this single VDAL ETF. You really don't need to know much about investing. Vanguard essentially takes care of it for you. Just as a note, I don't work for Vanguard and I'm not receiving any sponsorship from them, although they were voted Best ETF Manager 2025 by Money Magazine. In the name of transparency, I'll offer one alternative to VDAL, Beta Shares DHHF. This ETF is also 100% invested in growth assets, with 37% allocated to Australian equities and 63% to international. Its management fee is lower than Vanguard's at 0.19%, so certainly a valid alternative for budding investors. Anyway, that's my current investment portfolio, 100% VDAL, because I just want to simplify my investment life.